Hello and welcome back to the channel. In this edition, we'll be reviewing a company which is in the Wedtech space. We hear a lot of companies which are in the EdTech space and how those companies have come and gone at a rapid pace in India. Even in China, due to the uncertainties, a lot of cracking down on education companies. But here, what we're looking at is we're looking at something which the FIIs have shown a lot of interest in. The MIT fund in. So I'll drop the link to the video where I presented uh, the the companies which the MIT fund is interested in, and one of those companies which they are interested in is Matrimony.com. In this edition of the video, the primary objective would be to look a little bit more closely at the business and what the business has to do with growth and what are some of the aspects which are present within the business. So we'll be looking at Matrimony.com at a glance. We'll be looking at how Matrimony.com has achieved a leadership position, close to 60% market share of the total wedding tech space. We'll be looking at the matchmaking opportunity within India and what are some of the numbers of people who are flowing into uh, the marriageable age and what are seeking population, what are some of the people who are within the platform and how many of them are paying, what is the average ticket size. So we'll be looking at it much more in-depth analysis of matrimony.com. We'll be also having a look at the business overview, the financial highlights, and also some of the information related to the capital market. So, for example, what the performance of the price, what the price performance of the stock has been, how has it performed relative to the index, and what is the breakup of ownership of owners and financial institutions and mutual funds and the likes. So, diving right in. Here we see the performance of matrimony.com at a glance. We look at some of the aspects. This was founded by Mr. Murugavel Janakiraman, who's from Chennai, and he's done his stats from Presidency College and has been operating matrimony.com since 2000 as a community portal for not only Indians but also the huge Indian diaspora all across the globe. It is a pioneer and leader in the Indian online matchmaking space. It provides diversified online matchmaking services, both online and offline, to cater to the unique requirement. As at FY25, you can see the revenue breakup. 98% of the revenue that matrimony.com does generate is coming from matchmaking services, which is the web tech space, and 2% is coming from the marriage services. So the business is in its fabric, in its blood, is all about matchmaking services, providing the platform to really go in and seek the right partners and really kick off the operations from here. And how the business really makes money is through subscriptions. The business has 3 months, 6 months, 1 year subscription through which people do come in and pay for it. The average ticket size is some hovering somewhere around in the 4,500 range. So that's a good average ticket size to have compared to some of the fast delivery apps that we see which constantly keep making losses. So matrimony.com is not in that space. It does have profitability. It is not built on the fabric of constantly burning, but yes, we can see that the revenue has been stagnant. As at FY22 did a business of close to 434 crore, and on that it was not even able to add a lot of revenue incrementally. So in FY23, it just rose to 4,558 and then 4,814. So the revenue jump has not been uh, something that we see with a lot of online companies. So a CAGR of 30 to 35%, 40% growth, but not really in matrimony.com's case. It's been rising, but rising at a very slow rate, close to 9%, 10% year on year. And The business mix is such that 98% is coming from the matchmaking services. The market cap of the company as on 30th June 2024 was sitting close to 1,384 crore. So what we see that the revenue to market cap multiple. So the revenue is close to 481 crore and market cap is 1384 crore. So that's close to 3x, less than 3x in fact. But through that we get to know what the valuation parameters are like where is the market cap and how much is the total amount of sales that it is doing. And we'll later on also look at the profitability and the cash that it is generating. So here we see the leadership. At a glance, what are some of the key things that Matrimony.com stands for, and what are some of the things that it has achieved? So it's a zero debt company. It has free cash flow generation, so it is able to generate cash flow for itself. It has a paid subscription base of close to 10 lakh profiles in FY24, and this number is something to watch out for, because this number is constantly being on the uprise, because the number of people who are entering into the marriageable age, India being a very young population. Also, so basically technology is also something that is a strong suite of matrimony.com, and is constantly innovating to also add to the elite portfolios and elite profiles and those kind of things. So it's constantly moving in terms of reinventing itself and improving its technology and those kind of things. So here we can see it's a profitable consumer internet company with healthy balance sheet. It has some of the marquee investors, as we discussed. It has MIT fund invested within it, and there's another fund called Nalanda Fund, which is also invested into the stock. So here we look at the Indian matchmaking opportunity. So really, I think the total population um, is for India is standing at 1.4 billion, and total unmarried population is close to 600 million. So just under a shade of half, 50%. But the total active seekers will be much lesser, and those are in the range of 100 million plus. And the total weddings that happen within India are close to 11 to 13 million per annum. So we're talking about a crore of weddings per annum, which is happening in India. And this presents an opportunity for investors who think that matrimony.com will be able to wade off competition and will be able to um, continue to rise from the levels that it is. So that is for, I think, people who are watching this video to do their own research, to go a little bit deeper into trying to understand whether this company will weather the storm, whether this company will be able to continue beating its competitors. Obviously, there'll be a lot more tech companies coming into this space, and they will constantly make their subscription model in such a way that they will burn initially. A lot of VC money will be flowing. So that is one of the threat that I see. So here we are talking about 400, 500 crore worth of business, which is generating a net profit margin of 10%. But what if a company does come in and begins to offer um, something like this without charging anything, makes it free, and then it charges based on ad revenues and um, associated revenue branches. So, but it won't be that easy, because obviously the company has been in the space since 2000. So really, the objective of the investor is to really gauge whether the company will be able to weather the rough weathers of capitalism and be able to continue to make profitability, or will it built under the pressure of competition and may have to do its price cuts. But that is a very it's a constant exercise. You have to constantly evaluate a lot of data points and constantly put it within your radar as to whether this will um, make it continue to run it profitably, or it is going to come under a lot of storm due to competition. And every incremental information that you get will aid in that analysis, and will aid in determining whether this is a good buy, or is better to drop it. Personally, if I were to invest into something like this, my apprehensions would be around new incumbents coming in. So matrimony.com, although it has a 60% market share, but we have seen what has happened to companies which have had a lot of market share. We have seen what has happened to Nokia. We have seen what has happened to Kodak. So things do change quickly, and if it is on the tech platform and somebody is able to build the tech faster than what Matrimony has been able to build, and is able to scale it up much faster, has the BC money behind it, then it's a different ball game altogether. Then there are a lot of inherent risks within the business. But if you do believe that this company continues to have a moat, because it's been in the business for the last 20 years, and the technology and some of the things that it has is far beyond some of the new incumbents which come in, then it can be a good bet looking at the Indian matchmaking opportunity. So this is something which we are talking about, that the business is catering to the Indian diaspora across the globe. It not only has a nationwide coverage, but it has offices in three international cities. It has a corporate headquarters and technology operation in Chennai. It has a strong workforce of 2,700 people with on-ground retail presence in 110 locations, and is catering to the three international cities across the globe. So here we look at some of the numbers that are there in terms of what the paid subscriptions are. So here, if you look at the paid subscription, constantly been rising where compared to FY22 to FY23, FY24, people are willing to shell out more money to avail the services. Also, because I think the company has been smart about um, not only having an annual contract, because a lot of people do come in and within a 2 month, 3 month horizon, they're able to find a match and move on. So it has broken down its subscription to 3 months, 6 months, and a year as well. So that is something that matrimony.com has been smart about, and it has close to 1 million paid subscribers currently. And this number is going to be of prime importance. This number combined with the average ticket size, if it does not continue to fall, the average ticket size, then the company is going to be able to create a lot of profits into the future. So here we look at the performance in terms of, so we are talking about how the revenue generation has been quite stagnant in FY22, 23, and 24. But as an investor, we are not looking at the past. We are really looking at the future. Um, so the stock price is nothing but the present value of the future cash flows. And if you believe that the future cash flows are significantly higher than what the current cash flows have been in the future, in the recent future and the prior future, then the market tends to place it at a premium. But the beauty of the auction driven market is a market does not have perfect knowledge. So if somebody is able to go deeper into a company like this and is able to evaluate whether the future cash flows are significantly higher than what the current cash flows have been, and the market has not been able to recognize it, then this exercise can pay handsome dividends to the people who are able to do it. So here we are able to see that the profitability numbers. So the EBITDA margins range has been close to 26, 21.4, and 20.9 and 22.6. But really, when the company does start talking about EBITDA margins, we know that the company's net profit margins are not that high. And it is the case with matrimony.com as well. We'll be having a look at the NPM percentage a little later on. But here they have represented the EBITDA and not the net profits. So EBITDA is nothing but the earnings before interest, tax, depreciation, and amortization. And any company which has been making significant net profit margin would be the company which also would be making significant cash flows, and those cash flows are then used not only for acquisitions but also to improve the tech, to improve the workforce, to hire better people. So those then have a compounding effect on the way the stock performs. And a lot of times, I think people are in the notion that stocks are nothing and the price really cannot be predicted, but it can be to a certain degree. A lot of times it does happen that the fundamentals are not rise and the prices continue to rise. But again, that is an auction driven market. A lot of time it happens that that the company continues to make profits and continues to make generate cash flows, but the prices have not responded accordingly. So that can then be an opportunity to buy if you feel that the company has the right mix and has low risk and still has the potential to make significant returns. The idea is not to take high risks, but to lower your risks and increase your returns. And that is what when I analyze, I try and look at that. Can I minimize my risks? Is there a possibility that there is a margin of safety? By margin of safety, we mean that on a bridge which allows 10,000 kgs of a truck to pass through, would I want to take a truck which is 9,000 kgs, or would I want to take a truck which is 6,000 kgs, which will give me a lot more comfort? If the prices do come down, uh, the initial analysis will give me significant confidence to hold on to the stock and be able to weather the storm on the prices, because in the short run the prices are always volatile. So here I think they mentioned the growth drivers. I don't think they've done a pretty good job with mentioning the growth drivers. They mentioned something related to marketing affairs technology such as AI and flexible packages, which I was talking about, 3, 6, or 12-month subscription at customized and affordable rates. But the real driver is, I think, what the competition would be. Um, so in this analysis, I won't be going too deep into the competition. I think you can do your own research, and please do leave your comments to help the community, help this small community that we have created to understand whether the competition will have a significant impact on the business. um, Also, the real driver is the demography, right? The demography of India, and people who would be entering into the marriageable age, and then from that marriageable age, uh, that percentage would reduce to the people who would then be coming onto the platform, and then from there, the percentage who would be paying will again further reduce. And then also also have to look at the cocktail of whether competition will be impacting the business or not. So there's a lot of work around picking a stock. A lot of people pick it up by just looking at the price, but that is not the correct approach, according to me. So we'll be looking at, so this is the um, net profit margin and these kind of things that you're talking about. And here we see that net profit margins have been quite low. So what we'll do is we'll switch to the screener to quickly have a look at some of the other numbers that are present within the business. So the market cap currently is sitting at close to 1782 crore, with a stock PE of 36.1. Um, the book value is close to 131, whereas the price is currently sitting at 800. The ROC and ROE is close to 20%. So not bad on those front, because if you consider the risk-free rate to be 7%, which is the government yield, and we say that the risk premium, if we add on to it, is if it is sitting somewhere close to 15%, so 21% ROC and 18.2% is decent numbers. There's currently no pledge. Pledge meaning that the shares have been used as collateral to take loans. So the business hasn't done it, which is a great sign. Cash at the end of prior year was sitting at close to 224 crore. The company has cash equivalents of close to 223 crore. Price to earning is sitting at 36.1, and free cash flow average for the last 3 years was sitting at close to 162 crore. So if we look at the price performance, right? So the price performance has been quite flattish in nature, relative to some of the other businesses that they have performed since the COVID period. Since the COVID period, everyone believes that they found a magic wand to make money. Just enter into any stock looking at the price. It has to be low priced. All the myths that surround picking up stock picking in India. And if you enter at a low price, there's a possibility of you entering at a high price. But that is not the case. So as we are talking about, we also need to be able to estimate with certain degree of confidence the future earning of the company, and then be able to look at the present value as to whether the present value is attractive to initiate a buy call. So here we look at Matrimony.com, 13.97. Current market value to market price to book value is close to 6.11. Debt to equity is around 0.2, which is a good sign. It's not highly leveraged or high debts on the book. So we will look at the profit and loss statement. So here at trailing 12 month, the business has done close to 479 crore worth of sales on an expenses of 407. Operating profit margin is in the range of 15%, is able to do a net profit of 49. So the margins on this business are sitting close to 10%. We're also talking about the heavy workforce that goes into a tech company, but the good part is that they are able to generate profits, and from here on, I think they would be obviously plowing back some of it back to its own businesses. But given the nature of the business, the plowing back will be minimum because it's more of a tech platform. So once the expenses stagnate, because it's a tech platform, so expenses will be fixed expenses and variable expenses, and because it's an ed tech platform, the expenses would later on begin to stagnate. And if that does begin to stagnate, and you have a lot of subscribers who are coming in, and a lot of paid subscription, and also the average ticket size continues to increase, and competitions, it is able to handle its competition. The sales should see a significant uprise, and that cocktail, I think, would be a perfect blend for the net profit margins to increase further higher up, and that can be very attractive for the business later on. So the stock price CAGR, as we can see, that within the last 1 year, it's really begin to generate some traction and begin to be on the uprise. Return on equity has been consistent. Compounded profit growths have been abysmal. So the 3 year compounded profit growth is close to 7%. But um, what is historical is historical. We are not buying. If somebody is buying, they will not be buying looking at the historical figures. They'll be looking at all the figures related to the future as well, and then be able to form an opinion on it. In terms of the shareholding pattern, I was talking about Nalanda India Equity Fund. So it holds close to 9.45% within the business. MIT Fund is invested 8.77%, and they've been constantly, and they've increased stake. In fact, they were 8.53, and now they are 8.77%. So, yeah. So I'll close it here. That's it from my side on this edition of analyzingmatrimony.com. Please do like, share, and subscribe the channel, and also please mention in your comment section what you think of the analysis. What are some of the areas I should improve upon, or some of the other companies that you want me to look at. With that, goodbye and have a lovely day ahead.